Good morning, folks. It is Friday, early in the session, about 8 o'clock San Diego time. Going to do a market overview. And so gold's got several headwinds that it's dealing with right now. Markets are in risk-off mode this week as the stock markets rallied. Of course, the stocks are rolling over this morning because we've got an options expiration. We'll get to the stocks here in a minute. Strengthened the U.S. dollar, which of course yesterday and today has really increased, really strong this morning. Interest rates are rising again. And of course, in the big picture, we've got a liquidity crisis going on, which is part of the global debt collapse. And that started back in December of 21 with the Evergrande default on their $300 billion in debt. So that's the big picture. And of course, in a liquidity crisis, anything that's got a bid gets sold. And unfortunately, gold is one of the assets. It's the most liquid asset on planet Earth. There is always a bid for gold. May not be at a price you like, but there is always a bid. Somebody is willing to buy gold. And so it tends to get sold off when we're dealing with liquidity issues. So tailwinds for gold. Zimbabwe launched a 1 ounce gold coin back in, it was the third week of July. So we're about 3 weeks out from that. And there's been enough success with the 1 ounce gold coin that they're going to produce 10th ounce, quarter ounce, and half ounce coins starting in November. Franklin Sanders, in his update last night, said this: Zimbabwe is backing into a gold standard, and he actually mentioned Gresham's law acting in reverse, that good money is going to drive bad money out of the market, and that's the reverse of Gresham's law. Gold chart, this is monthly time frame. This is a positive chart. In the big picture, gold is in an uptrend. This is a continuation pattern, and the expectation from a chart like this is once this continuation pattern completes, we'll get another up leg, basically a duplicate of this up leg from the launch point, and that should take gold up to 2,500, maybe 26, 2,700. So this is a positive chart. We got MACD in bull mode, which again suggests that the primary trend is upward. We are on a sell signal. Energy is low. Gold in the weekly time frame reached the 62% Fibonacci retracement of this downtrend and then rolled over this week. And so that's what we've seen all week, is basically gold has been selling off from that fib level. MACD in bear mode on a sell signal, energy mid-range and heading lower. Gold in the daily time frame has dropped below both the 20 and the 50 and the median line of that shift pitchfork. Basically lost all of these support levels. Next support comes in down here, 1750, 1740. Somewhere in there. Notice that we've got an open gap, and price does not like to leave open gaps. So it wouldn't be surprising to see that gap filled, which would mean gold at 1740. MACD in bull mode, but on a new sell signal, energy very low. Gold, this is the gold deflated by twice the CPI inflation rate. Support level is where we bounced last month. Hopefully we're not headed for another bounce or another test of that support level, but we may be. We may be heading for another support test. And the comparable, gold versus the dollar, that's 1680 or so, which is where gold bounced last month. So gold could be headed as low as 1680 from here. Here's silver in the monthly time frame. looking for support. This is the $19 round number, actually a little bit lower, 1850, 1840, somewhere in there. MACD is in bull mode on a sell signal. Energy is low. Silver in the weekly time frame, basically selling off all this week, heading down to test the $19 level or even lower, 1870. MACD in bear mode on a sell signal. Energy is low. Silver in the daily, we're already at that $19 level, but bouncing. So we dropped a few pennies below 19 and currently bouncing from that level. MACD is in bull mode, but on a new sell signal and right on the verge of dropping into bear mode. Energy is low. Silver deflated by inflation, twice the inflation rate. We could be headed back down to test where we got last month, which of course is not that much lower. It's 1870, 1840, somewhere in there. Mining stock, this is my proxy for the mining stocks, which of course, I tend to focus on the junior miners, and they've been hit harder than the mid-tier and major mining stocks. And so in my next update, I'll look at GDX and the UE. We'll take a look at the larger cap mining stocks. Here in the monthly time frame, they don't look bad. Not exciting, but don't look bad. Basically found support, 2 layers of support there, upward sloping channel, and the bottom of this downward sloping channel. MACD in bear mode on a sell signal. Energy is low. Weekly time frame basically has rolled over, lost support at the 10-week moving average and the median line of this modified shift pitchfork. Appear to be headed lower. Support down at the 29 and change level, which is this prior low. MACD in bear mode on a sell signal. Energy is low. In the daily time frame, GDXJ is just following support down. This is the first median line extension of this modified shift pitchfork. Obviously, price is finding support there, but continuing to head lower. We've got a new sell signal in MACD. Energy is very low. US dollar has been strong. Biden signed the Inflation Reduction Act Wednesday or yesterday. Whenever you're trying to understand what a new piece of legislation will actually do for the economy, just take its name and flip it 180 degrees. So instead of calling this the Inflation Reduction Act, it's really the Inflation Increase Act. We're going to get $700 billion of new printing press money to fund this act, and they're giving money to green companies, tech companies, going to hire 87,000 new IRS agents who will be armed, well armed. Analysts are expecting like 1.2 million additional audits of low and mid-level taxpayers as a result of this. And so anyway, this is it's another $700 billion boondoggle. This money will get handed out to, friends of the family. The basket of currencies that make up the US dollar, they continue to weaken. The euro in particular, we've got energy rationing in the EU, a new energy gas tax in Germany. UK is headed into another significant increase in energy costs. They've already had a 50% increase already, expecting another 60%. Evidently, the Brits are going to be paying like $5,000 a year in their energy costs, which I guess that's comparable if you're in a hot state or a cold state. It's like Texas, you're probably paying, on average, certainly during the summer, $400 a month, which would be $5,000 a year. But anyway, significant increase in the cost of energy in the UK, which is the pound. UK just came out with a 10% CPI. It's the highest level in 40 years. Predictions of a deep recession in the UK. And so that's the two biggest, two of the three biggest. So it's the euro, the yen, and the pound. So euro's weakening and the pound is weakening, which of course makes the US dollar stronger. And then silliness just continues to expand. Silliness expanding. So they're asking for a 20% reduction in energy usage, which, you and I, we might be able to reduce our energy usage on a personal basis 20%. But if you look at an economy as a whole, the only way you're going to get that level of reduction is by shutting down entire industries. And so anyway, Europe is headed into a cold winter. And then, silliness again, we've got one of the talking heads in Europe. They're going to replace natural gas with hydrogen, of all things, which is just absolute silliness. For one thing, there's zero infrastructure to support a hydrogen-based economy. None. So even if you had hydrogen available, there's no infrastructure to support it. Your car doesn't run on hydrogen. Manufacturing facilities don't run on hydrogen. The hospital isn't heated with hydrogen. I mean, it's just stupidness. And they need energy in a month and a half. Winter starts in a month and a half. This hydrogen, if it's even feasible, is a 10 to 20 year down the road project. We don't even know that it's viable. I mean, this is just purely, it's not hypothetical. There have been tests and experiments. But one of the funny aspects of this, silly aspects of this, currently it takes natural gas to produce hydrogen. So to suggest that you're going to replace natural gas with hydrogen, which requires natural gas, it's just inane. These politicians, these talking heads, they're not intelligent people. They're very entitled people, but they are not intelligent by any means. Let's see, continuing with the US dollar, the move away from the US dollar continues. We've got a new memorandum of understanding between Saudi Arabian energy companies and the Chinese energy companies. It's a continuation of the Belt and Road Initiative and just another indication that countries are moving away from the US dollar. Xi, China's premier, is planning a visit to the premier, whatever we call MBS, Mohammed bin Salam, I'm not saying that correctly, the leader of Saudi Arabia. They're going to powwow here shortly, and expectation that they'll be talking about Saudi Arabia joining the BRICS. And as I've mentioned in the past, the current dollar standard is based on the petrodollar. The agreement between the U.S. and Saudi Arabia that Saudi Arabia will only sell oil in the U.S. dollar. And of course, if Saudi Arabia joins the BRICS, that is almost certainly going to change, which would be a major blow to the U.S. dollar. This is a new idea to me. Other countries, emerging countries in particular, when they issue debt, they have to issue it denominated in US dollars or nobody wants to buy it. Who wants to buy a bond denominated in the Italy's currency or Greece's currency, or any country you want to name. Nobody wants to buy that debt. And so those countries issue bonds denominated in the US dollar. And then when the US dollar rises, the debt burden of the bonds they have issued becomes greater. And so as the dollar strengthens, there are a number of countries that are really being hurt. Let's see, we already talked about that. So here we have the US dollar in the monthly time frame, obviously strong, pushing up into resistance. This is a support resistance level from, what is that, back in 99 and 2000. Currently finding resistance at that level. MACD is in bull mode and headed higher. No indication that MACD is going to roll over. Energy is extremely elevated and is actually rising even more. So the dollar has strengthened this week. Here's US dollar in the weekly time frame. There it is. I mean, big move higher in the dollar this week. And of course, that's based on weakness in the currencies that make up the basket of the US dollar. Because again, we've got an energy crisis in Europe, and Europe just going silliness, and then a global debt collapse. So not a good place fundamentally in the world right now. And the U.S. dollar is the least ugly sheep in the pasture, and so its currency is strong relative to everybody else. Dollar in the daily time frame, obviously two big moves yesterday and today. MACD in bull mode and on a new buy signal. Energy very elevated. Debt markets. So China cut interest rates. Everybody else is raising interest rates. China's cutting them. Turkey as well cut interest rates despite the hyperinflation that they currently have in that country. Last time I looked at the inflation rate in Turkey, it was over 80%. This is going to, an interest rate cut is only going to make it worse. And now China is proposing a $230 billion stimulus package. And of course, China is dealing with a collapse of their real estate market, which was triggered back in December with Evergrande defaulting on their debt, $300 billion in debt. And now they've got the citizens balking at paying their mortgages on unfinished real estate projects. And so China's in a world of hurt on their real estate bubble. That bubble is collapsing. Their debt market is collapsing, and they're trying to deal with it by lowering interest rates, printing money to stimulate the economy. Of course, their inflation is low, but their inflation, it's like 1% to 3%, very, very low inflation in China. But it's low because there's no demand. Nobody wants to buy anything, and so there's no demand. So interest rates are low in China. I figured out, or I decided, I'll put it that way, I decided this morning, it occurred to me to look at when did this vertical spike start in the one-year Treasury bill, and sure enough, it was December of 2021 when Evergrande defaulted on its debt. That's when this big spike started. And so I'm changing, I'm leaving the question marks there. But this morning I added this label. This is the global debt collapse. So I think in hindsight, whenever that is, at some point we'll be looking back at this vertical spike. And I think the label on that vertical spike will be global debt collapse. And of course here, this was mid-June when both the ECB and the Fed started buying debt hand over fist, trying to deal with this vertical spike. they're not having much luck, as we're about to see. This is yield on the 10-year note. Big gap up today. You can see that it's gapped up from the 20 up over, or excuse me, from the, we're looking at, what are we looking at? This is the daily time frame, yeah. So gapped up from the 20-day moving average up over the 50-day moving average and heading higher today. MACD is on a buy signal, heading higher. Energy is very elevated. In my opinion, when the central banks stop buying debt, as soon as they step out of the market, interest rates try to do what they want to do naturally, which is heading higher. And so for whatever reason, I suspect that the central banks backed off of their buying this week, and interest rates are heading higher in response. This is the really interesting chart to me. This is the yield on the 30-year bond, and a big move higher this week. This is the weekly time frame. So big move higher in the 30-year. MACD in bull mode, well, almost in bull mode on a buy signal. Energy very elevated. And so interest rates trying to head higher. Bitcoin is selling off again. I forgot to save it. The Feds came out yesterday and they're warning the banking system and financial investment management companies that crypto is dangerous. They need to be careful in the crypto markets. And of course, you know, the central banks, they want to roll out their digital currencies, and basically none of the current batch of cryptos will survive. And this is my opinion. None of the current batch of cryptos is going to be around when the central banks roll out their digital currencies. They don't want competition. That's why they bash gold and silver, is because it competes with their main product, which is the US dollar. And so anything they can do to kill the competition, they're going to do. And all of the current crypto tokens and stable coins, etc., they're competition for central bank digital currencies. So anyway, Bitcoin selling off again. Here we've got the equity markets. They've been strong this week. And of course, in my last update, I pointed out that this movement is too steep to be sustainable. That's basically a 45-degree angle on that pitchfork, and price just can't move that quickly and continue to move that quickly in either direction. And so we reached the 200-day moving average and rolled over this week. Obviously, today's a big down day. We're expecting, we've got the options expiration today, and so traders are coming out of the equity markets today. We'll see whether that continues Monday. MACD is in bull mode. Looks like we might get a sell signal today or Monday. Energy dropping from an elevated level. Dow in the daily time frame dropping back below the 200-day moving average. Looks like we might be finding support. This is the first median line extension of this shift pitchfork. MACD in bull mode, heading lower. Energy elevated, headed lower. NASDAQ, looks like we're trying to find support, 20-day moving average, and this is, what is that, first, second, third, fourth, the fourth extension of the, what is this? This is a shift pitchfork. That would be the fourth median line extension of that shift pitchfork. And some people who use Andrew's pitchforks would say, hey, that's silly, you know, four extensions, what do you think you're doing? Well, I leave forks on my charts for as long as they continue working. And this fork is working. Look, resistance, support. resistance, support, support. This pitchfork is continuing to describe the price action, and that's why I leave it on my chart. I just noticed we could draw, there's a vertical channel here that could provide support. I'd probably draw it something like that. And then you can see there's the upper side of it. And so potentially support at the bottom of that channel and a potential for a bounce from that level. Let's roll oil. So we've been releasing oil from the strategic reserves. That's what brought oil down in the last few weeks, which of course that was the primary thing that gave us a, quote unquote positive CPI report. Biden's saying that there was 0% inflation, which of course that's BS. 0% month over month, but not 0% inflation. Prices are still headed higher. The current inflation rate is 8.5%, and that's just the number that the BLS publishes. Real inflation is more like 17% if you go by John Williams' shadow stats numbers. Real inflation is like 17%. So Biden claiming that we had 0% inflation, that's just, talking head. Got to say something, try to make it positive. But so anyway, the reason we got this positive CPI report is because we've been releasing oil from the SPR, which brought prices down, which made inflation look better than it actually is. And of course, that oil's been sold to China and Pakistan. As an American, I kind of think of the SPR as, that's our oil. When America's in trouble, we have the SPR to help us, not to help China and Pakistan. But, that's just me. Maybe I'm a weirdo. Or maybe we're in crazy town. That's probably more likely, is we've arrived in crazy town. So here's Brent in the monthly time frame. Here you can see that oil prices have backed off in the last couple of months. That's why we got a good, there I go. Let me put air quotes around good, CPI report. Bouncing off this support resistance level and expectation that oil will head higher as we head into winter, which of course is only a month and a half away. MACD in bull mode on a buy signal, energy elevated but headed lower. That's all I've got for today, folks. Have a fantastic rest of the day. Enjoy your weekend, and I will talk to you soon.